So I know it's like sexy and stuff to think that, the market's going to fall and everybody's an idiot and people that are buying things and going along are just going to lose all of their money. And I just don't get it. I don't understand where people find the gall or the brain cells to tell me that the market is about to fall. When you ask them, they bring things up like the U.S. debt is out of control and inflation is nuts and the yields. And, I think to myself, yeah, you're probably right, but are you right on your time frame? Does the U.S. debt have anything to do, U.S. debt problem have anything to do with you being able to execute a trade over the next week or 4 weeks or 8 weeks or 16 weeks? Probably not. Maybe in 10 years, the U.S. debt's going to matter. Is it going to matter within the next 4 to 8 weeks? Probably not. So why do you give a shit about it? Anyway, let's talk about market breadth really quick. I want to focus on something because obviously people are freaking out still. There's a couple down days in the market. Obviously, that's a new bear market, right? People are... I don't know if there's ever been a bull market that has been more hated than this, and I've been trading for 14 years. It's unbelievable to me how many people do not want to participate in this, and that's fine. You don't need to. I'm not here to convince you to buy stuff that's in uptrends. I really don't care what you do with your money, but I'm going to show you something. If you filter, let's go back really quick. If you look at how many things that are available to trade at any given time, 9,506 in FinViz. If you filter by 52-week highs, and then you tear the ETFs off, you have 248 names in the market that are hitting yearly highs, 52-week highs. That's kind of a lot. If you go and compare that to new lows, it goes to 158. That means there's a lot more 52-week highs than 52-week lows. Let's go back to new highs. If we go to market cap and we take out all of the crap, so let's go to only large and mid caps, and in today's market, it's probably mid caps as well, anything over 10 billion, let's be honest. If you go to 52-week highs and you look at just the mids or larges or megas, anything over 10 billion, you have 71 names hitting a 52-week high list. If you go to the lows list, you have 8, guys. You have 8. There is so much strength in the market. Even after 2 down days, oh my gosh, there was a pullback in the market. It's a new bear market, and yet you still have outstandingly bullish market breadth. It's insane. Once again, I'm not here to convince you that you need to go long, but we can do this another way as well. Why don't we go to 50-day highs, which for whatever reason people tend to prefer. Let's go to the shorter term stuff. What do you think is going to happen? 50-day highs, we have 99. That are over $10 billion in market cap. 50-day lows, we have 37. So once again, guys, like 3 times as many bullish setups and breakouts than there are bearish setups and breakdowns. I don't know how else to tell you this, guys. If you're consistently thinking that the market is going to fall, it has to be backed by something in reality. It cannot be like Fugazi, fairyland, your opinion, your biases, what the scary guy on FinTwit said, or whatever the media guy said, or whatever the bullshit YouTube creators' thumbnails are screaming at you. Come on, guys. Just look at the data. Look at the numbers. There's more stocks going up than going down. And it's been that way for the last year? 15 months? Pretty consistently, guys. Even during the corrective phase from July to October, it was not the end of the world. I'm telling you, if you just stop being dickheads and start looking at data, it's going to make the trades a lot easier. You're not going to win every trade, and that's okay. If we look at TradingView really quick, let's look at something. Once again, we want to look at some market cap stuff, right? Let's go over here really quick. Let's look at stocks above their 50-day and stocks above their 200-day. I mean, does it have to be any more complicated than this? Right now on the weekly, we're going to look at the weekly. Let's go to the daily. Let's go to the daily on both of these. We just had a monthly charting session inside of TTI, so we're looking at all of the monthly and weekly charts, not daily charts. But as of right now, guys, stocks above the 50-day moving average in the S&P 500, 72%. 72% are trading above their intermediate term moving averages. 77% are trading above their 200-day moving average. Guys, 75% of the stocks in the S&P 500 are trading above their 50 and their 200. That means their intermediate and long-term trends are up, an overwhelmingly large amount of them. When you couple that with any sort of scanner that's looking for strength, you're going to see time and time again more stocks breaking out than breaking down. Now, I'm not saying that it's going to have to stay that way. I'm not saying that what just happened over the last 2 days should be completely nulled out. I'm not a perma bull. I'm not a perma bear. I'm a perma nothing. I'm a price action trader. But I'm also not stupid enough to think that I'm smarter than the market. You are not special regardless of what your mother told you. I'm sorry. But people like me and other people that trade price are going to take your money over the long run if your entire trading and investing ideas are based off of shit that does not actually impact the market, like the US debt or inflation or the fact that your neighbor lost his job or any of that shit. Follow the trends. Follow market breadth. Look at numbers. All of this stuff is overwhelmingly telling you that the market is still bullish. Are we going to get a correction? I certainly fucking hope so. If the S&P 500 falls 10%, or God willing, it taps 478, there's going to be a lot of opportunity to be able to go long in towards the third quarter and fourth quarter of 2024 and potentially in towards 2025. Guys, these all-time high breakouts don't typically fail. If you go back through history over the last few decades, these all-time high breakouts do not typically fail. They do have corrections, right? We generally have corrections 1 to 2 times per year of 10%. It's outside of the realm of ordinary not to have something like that. We had one last year. It's probably going to happen this year, but I'm going to tell you right now that if you think a corrective phase in a bull market, which we're in the second year of a cyclical bull, and the 11th year of a secular bull is an opportunity to short new lows, thinking the market's going to go all the way back down here, you are statistically going to lose the trade. Anything can happen in the market, particularly if a black swan event hits. But guys, all of the data is still continuing to support that this is the second year of a cyclical bull. Market breadth is very strong. And if you want to try to counter trade this trend, you're probably going to continue to get the shit kicked out of you. Guys, my name is Hamilton. I'm here with the Trading Initiative. I'm in a mood. If you like this type of content, please like and subscribe. Leave a comment below, and I'll catch you next video.